about the stock, basic information about stocks. I will go with you for the entire class today. For the presentations, or not presentations, but for the Q&A for the participants in the market, remember that I will not ask you today, but maybe next week. Just find the suitable time so that we can discuss that one together. Otherwise, just the I will put that one as self-study. So be prepared for that one, and that will be done next week, not today. So the first type of security that we study is stocks. And for stock, we have two types. We have like common stock and we have preferred stock. So we will go like particularly for a particular kind of type. The first one, common stock. So this is the features of common stock. I will use this one very quickly, and then I will move to the whiteboard to explain to you guys some of the very important concepts regarding stock. So the first one, this one is issued by the stock company. When you own a share, when you buy a share, you will become the co-owners of the firm. All right, so it will come to the equity capital of the firm for the case of share stocks. Characteristic of the stock, it will the same like the things that we have learned so far. Wait a minute, I need. Oh, sorry. So I will like slow down my speed. So for the things that we have learned yesterday, we know that the characteristic of security, including stock, bond, certificate, or derivatives, I mean any of them, they have like three features. The first one is return. Any kind of security will bring you return. The second one is risk. We have unsystemic and systemic risks, right? And those risks make the expectation of us about the security returns different from the realizations of the returns, right? It's because of the risks, like unsystemic risk coming from the firm side and systemic risk coming from the macro economic side. And the third one is liquidity, is the way or the ability to transfer or to convert one security into cash, right? So these three features will be embedded into stock as well, because they are also kind of security in the market. The second one is that the common share or the preferred share entitle the holder to the ownership of the company. So if you buy the security here, depending on type of security, you will have like different right to the firm. For example, like if you buy stock, so you will have the ownership right of the firm. But if you buy the bond and if you hold the bond, you will have the debt owners of the firm, right? The third one, no maturity. So if the bonds, I will give you the sense of maturity for 5 years or 10 years. That's not the case for stock. So as I mentioned for the first class, stock is considered as no maturity security because it will work or not work, but it will live with the life of the firm. I mean that if the firm doesn't go bankrupt yet, so you cannot determine the life of the firm, and then at the same time the same thing happened to the stock, meaning that if the firm still operate in the market, so the share or stock still live with the firm life, and then you cannot know the maturity of the share. And by that reason, you can consider stock as long-term investment because there's no firm working less than, not such firm, but not or not many firms like operating in the market with the term of less than 1 year, right? There will be some, but it's not common in the market. So usually stocks or share will be given the term, the maturity as no maturity or long-term maturities. When the firm go bankrupt and the firm disappear, and then you can determine the life of the security here is the stocks, right? The second one, not second, my mistake. So the fourth one, there's no limit on the amount of dividends. We will come to this one in very detail in a few minutes. Dividend amount per share is determined by the company board of directors and must be approved by the shareholder. All right, maybe I will bring you to this part right away. The next one, residual claim and limited liabilities. This one regarding to the situation of the firm liquidations. Liquidation is when the firm go bankrupt and they need to sell our own assets and the debt of the firm as well to collect back the money. And that will refer to residual claim. Residual means the money that you collect from selling the securities, or selling the assets of the firm. So the remaining amount of money that you get from selling the firm to close out the firm. And this one is called residual from the firm. So for owning the firm share, you will have residual claim, but then it will be the last one of the firm that have that residual claim because you are the owner of the firm. So you need to take the whole responsibility to the firm, so that the firm needs to pay to use the money collected from selling assets of the firm when the firm goes bankrupt. So that money will be used to pay for the debt owner first, pay for the employees of the firm, and then the remaining amount of money will be used to pay for the owner of the firm, which are the shareholders. All right. Do you guys understand this part? Hello, guys. Are you okay here? Am I speaking still fast to you guys? Hello, guys. Are you here? If you are listening to me, please comment on a chatting box.
Explain it, please.
Sorry?
Can you re-explain it, please? Still don't get it. Figure it out.
Which one? Which one?
The no maturity.
Okay. Thank you. So no maturity means that there's no time of share life at the current time. Okay, let me take this example for you guys. Suppose that the Joy Stock Company. What is the Vietnamese name of Joy Stock Company, right?
Công ty cổ phần.
Yeah, exactly. Thank you, guys. So Joy Stock Company is kind of like, okay, this one as founded. Let's say it's founded in 2016, right? So currently we are at the year of 2020, right? And because they are Joy Stock Company, so Joy Stock, right? So to establish this kind of firm, this firm needs to issue the share to the shareholder, right? So there's many of them co-owning the firm here since 2016. So up here, time 2021. So it's already 4 years in the operation, right? And since the firm still operate, the stock or the share is still there, right? You are still the shareholder of the firm. So it's 4 years already. So stock, like you can say like up to now, stock have lived for 4 years, but you cannot determine the maturity of the stock. Like you cannot know when stock will due because you don't know when does the firm will stop their business, right? When will the firm stop their business? So at this point, they're saying the firm share like have no maturity at all because you cannot determine right now what time the firm will die, right? When the firm dies, the share or stock of the firm will disappear as well. And when it disappears, meaning that it's at the maturity. That's not the case, like the case of the bond, 5 years of maturity, right? 5 years of maturity, and it's issued in 2010. So meaning that in 2015, this guy will disappear from the market. You cannot own the bond any longer because that bond just disappeared from the market. It's end of the maturity. But that's not the case for the stock because right now, when the firm is still operating in the market, so stock's still there, the share is still there. So you cannot determine the maturity of the firm. Because you cannot determine the maturity of the firm and the maturity of the share, so it's called no maturity share. Are you guys all right here? Is it clear to you guys?
Yes.
Okay. So we go for the more important part here, which is about the dividends. All right. So I will bring you to the whiteboard to explain to you guys. There's some like very important like concepts in the market right now that you need to understand to have good sense of like security, and particularly when currently the firms in the market, the listed firm in the market are going to the process of paying dividend to the customer, to the shareholder. Okay, so the first one I need to write down here. Wait a minute. Okay, the first one. The first one should be there. And this one, the second one. This one here, and the second one, sorry. And the second one here. All right, wait a minute. Wait a minute for this. Okay, the first one. Dividend amount per share is determined by the company board of directors and must be approved by the shareholder. I will explain this part first, and then we'll go for the second one. So the first one, who are the shareholders, guys? Who are the shareholders? Shareholder or shareholders. Can be one or can be many of them, right? Shareholder is the one person that's holding share, firm shares, right? Holding or owning. Holding or owning firm share. And this guy will be the owner of the firm. Meaning that all the assets like co-owner of all assets and liability of the firm. So we keep in mind that we have the equity capital here. Equity capital in the balance sheet of the firm, right? That's the first one, charter capital here, charter capital. Keep in mind this one. This one is called vốn điều lệ. And as I mentioned in the first class, we have this one equal to number of firm shares, times the face value of the share. How much is the face value, guys? Do you remember how much is it? Quỳnh Hương, do you remember that I already gave you?
Yes.
How much is this? The firm share face value?
I'm sorry.
How much is the face value of Vietnamese share?
Um, 10,000 Vietnam dong.
Yeah, thank you. So 10,000 Vietnamese dong. All right. The second part is the share premium. Dư vốn cổ phần. Share premium. So share premium will increase, including the two parts. The first one is like offering price in primary market minus face value. So the difference in the price between the offering price in the primary market and the face value will be number of share, will be accounted or will be recorded in this kind of criteria. The second one, selling price minus buying price and number of treasury share. Number of treasury shares. What is treasury shares? So this one will be given to you in maybe at the end of the class. This one is called in Vietnamese name called cổ phiếu quỹ. And we have the third one, like retained earnings. We have the fourth one, like firm, fund, and many. All right, so keep in mind this one. These are the main parts of the equity capital in the balance sheet of the firm. So it's like if you are the shareholder of the firm, you are the co-owners of the firm. So everything that belong to the firm will belong to you. Will belong to you too. So it will be the owner of this thing. So let's think that the return or the earnings of the firm. This one belongs to the shareholder. All right. And this earning could be divided into dividends and retained earnings. So all of these things belong to the shareholder. It's just like if the shareholder decided that I want to get some of my earnings back to my pocket, so it will be in the form of dividend. If the shareholders agree that, okay, I don't need to take dividends, just keep the money at the firm so that we can expand the operation of the firm or make investment to increase the value of the firm, so that I benefit as well because I am the owners of the firm. All right, so this is like the two forms of earnings to the shareholder, of which dividends is the thing that get back to the shareholder pocket, and the other one, return earnings, will stay in the firm. This one will be dividend, will be shareholder, like pocket. Right. So this one is called earning distribution. Phân phối lợi nhuận. And this one will be at the firm. Correct. So that's the first one. Because this one because the dividends belong to the shareholder. So the one that gets decided is by the shareholder. The board of director is just like, you can think like board of director is the one that comes out to the shareholder that how much you should get back, how much you should retain at the firm so that we can make further investment and expansion of the firm. And the final decision will be made by the shareholder because I am the owner of the firm. I will have the right to the value of the firm. Or in other words, like I will have the right to decide how much money I will get back to my pocket and how much money I will I will keep at the firm. All right. So the dividend amount will be decided by the shareholder. So keep in mind that one because you are the owner of the firm. So it will decide that much of amount. So the second one is that no limit on the amount of dividends. Why? Anyone can give me any information on this? No limit on the amount of dividends. So how much is no limit? So it could be 0%. It could be no paying. It could be, I have ability to pay, but I pay 0%. This one is two different things, okay? No paying and 0% is two different things. Even though the amount of dividend that shareholder receives is still like zero, none of them. But no paying and 0%, they are two different like type of dividend policy. So a low limit, like it could be 0%, 10%, sometimes it could pay you 60% or 70%, right? So the question to you is that why? Why do they have different policy like this? And do you prefer high or low rates of dividend? What do you think, guys? Why the dividend is not like fixed? It's not fixed, right? No limit. They're saying like dividends is discretionary. Discretionary. Nhung, Bùi Ngọc Nhung.
So I think that they could pay no dividend because they keep to reinvestment in their firm, and they someone could prefer low dividend because it means that the firm has the development to yes. Then they keep the return to push the company higher.
Good point. Thank you for that. So the thing that you are mentioning is about 0% dividends, right? 0% dividends or 10%, the low dividend ratio. It's just because the firm wants to put more money into operation. They want to keep more money for reinvestment and expanding their firm size of firm business. So that's a good point. The first reason is that why it's discretionary is because of the first one. Like Nhung just said, depending on firm like dividend policy or firm like reinvestment policy, right? So if I want to keep more money for the reinvestment, so I will not paying the dividend to me. I will not take money back as dividends. I will keep money at the firm for reinvestment. The shareholder will choose so, right? Or if I don't need to make reinvestment right now, or like the case of Japan in previous time, in a couple of years, like recently, and for the case of Vietnam right now under COVID situation, right? So maybe a lot of the firm make huge profit in the previous time. They don't want to they don't want to expand the business right now because that will cost them a lot of money. But then the sales will not increase because of the disease, right? So firm will not make reinvestment, or they will not expand their business. So a lot of money that the firm earns, they decide to pay dividends, or the shareholder decide to take their money back in the form of dividends instead of keep not a lot of amount of money in the firm for reinvestment, right? So this one, depending on the firm dividend policy and the firm reinvestment policy, the rate can go from 0%, 0% or like 10% or so on, and so on, right? So that's the first reason. What is the second reason for this one? That's the second reason for the decisions that dividend could be low or high or could be zero.
It can base on the amount of share that shareholder have.
Yeah, that's right. So that one for the shareholder side, right?
Yes.
So yeah, right. That's right. But from the firm side, right? The amount of dividend per share will not like the amount of dividend per share will be the same for all investors. That will be decided by the shareholders. And why do they come to that kind of decision of paying or not paying, paying high or paying low? That's what I ask here. Do you have any like ideas on this?
Because when they have the large amount of share, they can they, can I speak in Vietnamese?
Yeah, right.
Kiểu họ có quyền biểu quyết đi ạ, thì biểu quyết trong cái đại hội cổ đông ấy ạ, thì họ có thể lựa chọn cái mức mà họ mong muốn.
So that comes to the first reason, right? Depending on the firm dividend policy and firm reinvestment policy, because that one will be decided by the shareholder as well. So the shareholder will be together decide the dividend policy. So like you said, if they have like a huge amount of like the share, they will have the large voting right, or like kind of like how to say, not controlling like controlling voting right, so they can decide the dividend policy as they want. That's from the power of the big shareholder in the firm, right? But it still go back to the dividend policy. What is the second reason? Did you think of anything? What if I want? Okay, you. Do you have any idea?
I think that if you buy share, it means that your contribute to the capital, and say it's capital instruments, so that you accept the risk of the share if the company not operating well. So if they not work well, they will have no returning. Then you accept it when
Good point.
you buy the share, not like the bonds. They have fixed interest rate. And yes.
Good. Excellent point. Okay, thank you, Nhung, for that excellent point. So that will come to the second reason. It's depending on the firm performance. Good point. So you are the shareholder, like she already mentioned, because you are the shareholder of the firm, so you are the owner and you take the entire responsibility to the firm performance. So if the firm works well, okay, you can receive dividends. If the firm doesn't work well, they have no returns at all, so you cannot share the performance of the firm. So regarding to the firm performance, keep in mind this one for me. If the earnings of the firm, earnings smaller than zero, no dividend payment at all. There's no responsibility to the firm to pay dividends to the shareholders. And in other words, there's no right for the shareholder to ask the firm, determine for me a dividend ratio so that I can receive in the future. No, because we have no earnings, right? We have no additional value, so there's no payment at all, right? So there's no dividend payment requirement. If earnings greater than zero, so this one optional, right? It will depend on the second one, on the first one that you here. It's for depending on this guy. All right, it's optional, and it will depend on the dividend policy. Optional that it can be 0%, it could be 10%, it could be 60%. 60% or 70%, it could happen in two reasons. The first one, the firm doesn't have any reinvestment policy, so I will take all the money back into the form of dividends set by the shareholders, right? The second reason is that I make huge profit, even I put aside some part of the profit for the money, so that firm has money pay dividend to the shareholders. That's the two reasons for paying that amount. That's the thing to look for in Vietnamese market. Like push them to ourselves. Right? If this firm operating too big so that they have a huge return, and now the shareholders oh my god. Sorry guys, I lost my connection and now I lose all the information here. Okay. So the reason for this discretionary dividend, there are two of them, right? The first one depending on the firm performance. And the second one depending on the firm like dividend policy or reinvestment policy. All right, so this one, no dividend payment. All right, so I re-mention here that when you make investment in the stock market of Vietnam or any market, and when a firm pay you, like announce that they will pay like 60% of dividend this time year, last year, so we need to keep questioning themselves that if 60% is because of the firm doesn't have any dividend policy, didn't have any like reinvestment policy, or because of like the performance of the firm. If the firm doesn't have any reinvestment policy and they pay you 60%, okay, quit that 60% and get out of the firm, because they don't have like future of growth, right, of development. The second one is the dividend policy of 60% is because of the huge profit the firm make for the last year. Okay, so that's good. I'm satisfied with that one, and maybe we can hold the firm share for some more time. All right. So that's the thing that you need to keep in mind when you make investment in the market. The dividend form. The dividend forms or dividend payment method, that will be three main types. The first one, in cash, in shares, in assets. In cash, meaning that shareholder will receive cash as dividend. And cash dividend is calculated based on this one, dividend payment ratio times the face value of shares. Face value. For example, if a firm decided to pay the cash dividend of 35%, meaning that per share, dividend per share will be 35% times 10,000, 3,500 BNC per share. This is the way that you calculate the cash dividend. And the second one is the shareholder dividend in share, dividends in share, or they call it a share dividend. This one means that the shareholder will receive shares as dividends without paying any additional amount of money. So this one is N over N. This one is dividend ratio, payment ratio. Right. N over N, dividend payment ratio. Like if the share dividend is 30%, meaning that investor A is owning 30,000 MBB share. MBB here. $30,000 and 30%. How much is this, guys? Let me make calculation. I don't know. 9,000 MBB as dividend. Total share of A will be 39,000 MBB. Are you guys understanding this part? So dividend in share, meaning that instead of receiving cash, instead of receiving cash, you will receive more share without paying any money. Because dividend is the right that you can receive in the future if you own the share, right? You don't need to pay for getting, for example, like the cash dividend is 3,500 per share. You don't need to pay any amount of money to get that 3,500 per share, right? And the same thing is that if the dividend is paid in the form of the shares, then it's like you don't take that 3,500 Vietnamese dong as dividend, but instead you will take more share in the account as dividend. In this time, for example, like, what is this one? Sorry guys. Ratio MBB is 30%. If MB Bank shares is decided by the shareholder to be paid like 30% dividends in cash, meaning that they will pay you additional 30% from the things that you own. So N here equal to N times dividend payment ratio. N is new number, and capital N is old number of shares. All right. So if you are owning 30,000 MBB and the firm decided to pay 30% in shares, meaning that it will get 9,000 MBB more without paying any money, because that's the right. All right. And in a sense, like they will pay in a sense, meaning that it will not receive share or it will not receive cash, but instead it will receive assets. For example, like if the firm say producing soap, right? So it will receive dividend in soap, maybe, or shampoo, or like bike, something like that. So it affects depending on the shareholder decisions. If the firm make performance, but I don't want to give you cash because I want to give that money to the firm, and I don't want to increase the number of the share because that will make the share capital increase. I don't want to, so I will pay you in assets. All right. So that's 3 forms of dividends. Keep in mind for me, especially for the formulas that I already give you out here. All right. This will be used so often in the exercise in the upcoming chapters. The second point, which is very important, who get the dividend? Who get the dividends, guys? or in other words, dividends, will be paid to whom? Guys, what do you think? Who will be the one that get the dividend? Dividend is the right, of the shareholder. So they will take that one for free. I will take the cash here, 3,500 for free. I will take that 9,000 more of MBB shares for free because my right of owning the share. So who will be the one that getting the dividends again? I just need you to confirm. Who, guys? Who will be the one that receiving dividend?
Shareholders.
Yeah, who are the shareholders? Right, this one will be shareholder. Who are the shareholder of the firm? The one that owns the share, right? But you know that we have two markets, primary market and secondary market. If in the primary market, there's ownership between the shareholders and the firm. So firms that know that I'm like selling the share to those guys, I know those guy names, right? I hope they are. But what about secondary market? In the secondary market, it's traded among many investors. So today I can buy the shares, but next week I will not be the owner of it any longer. And next week the share already traded among many investors. So who are the owner of the share? How long should I hold the share to get a dividend? What do you think? How long should I hold it to get the dividend? I remember that there's one guy in our class already make investment, right, in the stock market of Vietnam.
Hello?
Could you answer this one? What do you think? How long should I hold the share so that I can get the dividend?
Okay.
What do you think? No part on that.
Teacher, can you hear me?
Yes.
Your
Yes.
mic has we cannot hear you for a second.
Oh, really?
Yeah.
Sorry. Which part haven't you listened to?
Like from the part of the line 3.
Line 3? Line 3? What is that?
Like from the shareholder own the shares? Or how long?
Okay. Yeah. I mean that. Okay, thank you for that. Who gets the dividends and to whom will dividend be paid? So someone said it's like the shareholder, right? So shareholder will be the one that own the share. So I already I explained to you guys that if that in the primary market, so the firm will know exactly who are the shareholder of the firm so that they can pay dividend to those guys, right? Because in the primary market, there's only link between the issuer and the buyers, the investors. But we have not only the primary market, but also have the secondary market. And in the secondary market, the shares are traded among many investors. Like I said before, today I could be the owner of the firm, but next week I already sell the share to the other guys. So that guy will be the owner of the firm. And next week maybe that guy already sell the share to the other guys in the market. So the other guys, those the other guys there, will be the owner of the firm. So from the firm side, who should I give the dividend to, right? So the question is that is the shareholder. But how do I determine, right? The dividend this year, in the year of 2020, will be the years that paying dividend of which years, guys? Years of 2020. The firm decides to pay dividends. That dividend will be dividend for which year? 2020 or 2021? For the year of 2020. Right now, there's a lot of firms in the market announcing that they are going to pay dividend. And if the year now is 2020, so what year is that dividend? That will be the dividend for the operation years of 2020 on to 2021. will pay dividends of the year, which one? 2020 or 2021? And why? Ming?
I think the year 20 and 21 will pay the dividend of the year 20 and 20.
Why?
Because this is the dividend from the previous operational year.
Good. So dividend is paid out of the firm. Thank you. Firm earnings, right? And by the end of 2020, they can know that the earnings of the firm is positive or negative, low or high, then the dividend policy will be produced during the general meeting, right? Okay, good. So 2021 will pay the dividend for 2020. So my question to you is that, okay, if I want to get this dividend, how long should I invest in the market? How long should I hold the share of the firm, right? And who should be the one that receive the dividend from the firm? because now I don't know who are the owning of the shareholder, right? So to answer for those questions, I will bring you to this topic. Okay, just wait for me. So determine T. Since the shares are traded among like various investors in secondary markets, to help the easier to determine the current shareholder of the firm, to distribute them the right of shareholder, including like right to attend general meeting or voting right, dividend receiving right to buy new shares with like a preferable price. So there's many rights for the shareholder of the firm. Okay, so that's very clear, very specific to you guys already. So to help the easier to determine the current shareholder of the firm, to distribute the right to the shareholder. So that will be several rights. The right to attend right to attend the general meetings, the voting rights, the dividends receiving right to buy new share with a preferable price, and so on. So there will be 2 crucial days announced by the issuer whenever they need to distribute any right to the shareholder. So when they need to gather the investor for the general meetings, they will need to know who are the shareholder of the firm, so that I can send out the mail or the envelope to invite them to the general meeting. So they will need to announce those dates or days to determine who are the shareholder of the firm. Because this time, you can be the shareholder of the firm. You can attend the general meeting. But when I pay you the dividend, you are not the shareholder of the firm any longer. So I need to redetermine who are the current shareholder of the firm. And then I need to announce the other 2 days for the dividend receiving rights. Means that at any time that you need to be the right to the shareholder, the issuer needs to announce 2 days again. Then this 2 days could be different. For example, like the day for attend the general meeting could be different for the day to determine the shareholder giving voting rights to the shareholder or to give them the dividend. Are you guys okay? For example, like And those two dates are in the professional term. The first one, XY date, and XY date. This one in Vietnamese, I should write. It's in Vietnamese. Ngày giao dịch không nhượng quyền. XY date. Let me think if I need to give you the definition right now, but maybe we'll make you confused. XY date. Okay, maybe now. XY date is the date that if you buy a share, you get no right. Record date, Việt Nam mình gọi là ngày chốt danh sách. Just write down so you can remember while writing. If you're looking at my typing here, maybe you cannot remember for long. Okay, just copy this one down and then I will explain. So we have two dates and just make it clear. We take a real life example for you. Oh, that hopefully done. Okay, this one. I can send you the link right now. Just wait a minute. Here. I already sent in the chatting box, so you can open that one from the side. I will summarize the information right now. So, MB Bank. Sorry, wait a minute. NB Bank, share, ticker, NBB. All right. First one. YT attend general meeting. XY date. Record date. All right. The second one. The second link I already sent. Just wait for me. I will find the other one. That's better. I haven't get the information of NDB, so let me find the other one. NDB. Here, I will sending you here. Are you guys with me?
Yes.
All right, change this one a little bit for me. My mistake. Này sẽ không hưởng quyền, chỉ có một tên thôi. Này trước sẽ cổ đông. thì có hai tên, ngày chốt cổ đông hoặc là ngày đăng ký cuối cùng. Tôi nhầm, các bạn sửa lại thôi nhé. Vì chưa có thông tin về chi trả cổ tức, về thanh toán tiền cổ tức của năm nay của MBB, cho nên cô lấy của năm ngoái. Okay, so this is information about the MB banks. So there's two rights here. The first right is the right for receiving dividends in the year 2020, and the second term is in 2021. Right to attend the general meetings for like reporting the performance of 2020 and plan for the upcoming year, which is 2021. So you see, like, because of the owners of MB have changed over time. So last year, you could be the one that received the dividends from the firm, from the bank. But this year, you may not be the one that attend the general meeting. So because of the ownership, the name of the ownership, the name of the owners and the owners of the firm, of the bank, have changed daily because of the trading in the secondary market. So each time that MBB needs to provide rights to the customer, to the investor, they need to announce this due date again to redetermine who are the current shareholder of the firm, so that I can give the right to them. So based on the due date, they will finalize the list of the investor of the firm. So those that owning the firm share, which is MBB here, and with their names on the list, so they will get the right now to those dates. For example, like if you have the name on the record date of 6th October of 2020, so it will be the one that receiving dividends for the year 2020, 2019. But for the case of 2020, by some reason, you don't own the you don't own the share of MB, or you own the share of MB, but in different terms, so that you don't have their name on the final list made on the record date, which is 26th March of 2021. So you will not have the right to attend a general meeting. So that's the meaning of those dates, to determine, to finalize the list of the shareholder of the firm, so that the firm will know who are the current shareholder of the firm, and then
those people with their names on the list will be given the right. Could be the right of receiving dividends, or could be the right to attend a general meeting. So how do we use the information of those dates to get the dividend? So the main point is that if you want to get the right, the name should be on the list, right? So how should we put our names on the list of the firm? So keep in mind these two kind of like basic information here. XY date is the date that if you buy the share, you get no right, and record date is the date that they will finalize the list based on the information of the XY date. XY date will come first, and record date will come after the XY date. You can see here, XY date is 5 of October, and the record date is 6 of October. The XY date is 25 of March, and the record date is 26th of March, right? So the record date come after the XY date. That's the first one. The second one, under T+3 settlement method in stock market of Vietnam, these two dates are 2 days difference. And under T+2, these two dates are in 1 day difference. So what is T+3 and T+2? So we go for settlement method, in Vietnamese stock market. T+3 means that trading, buy or sell shares on day T, investor will receive if you buy, so you will receive share, right? And if you sell, you will receive money on day T+3. T is the working day, excluding Saturday, Sunday, and national holidays. All right. T+3, that's T+3. T+2. So receive shares or money on day T+2. So if you get the money, if you buy, you receive the share. All right, on day +3. So it's not like the other market. You pay, you get the product, but you pay now and you get product in day 3 from the day that you make the trading successfully. All right. So we have a timeline like this. Monday, Tuesday, Wednesday, Tuesday, Friday, Saturday, and Sunday. Yep, Monday here, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. And today is Friday 14. So today is 14, right? 15 and 16. So we have here wait a minute. When you do the final examination or any exercise, if you don't get quite like quick with the terms of this 2 days, just draw out a timeline like me, like this. So it will be very clear and you will not make any mistake for this. So that I buy the share here. So when will I receive the share? If the date is T plus, if the settlement process is T plus 3?
On Friday.
Which one?
The 14th.
14? So we will mark this one T, right? If we get the announcement from the firm that you already trade or you already buy successfully from the other investor, this one in the secondary market, all right? Keep in mind, this one is in secondary market. Secondary market. Okay, this one day T, right? So this one will be T plus 1. Let's check. T plus 2 and T plus 3 correctly. So like he said, right? So this one will be like on T plus 3, which is 14 May, you will receive the share. And if the trading process is T plus 2, meaning that if you buy on Tuesday, so Thursday, you will receive the share, all right? Okay, so let me ask you this. What if you sell the share on Friday, which is today? When do you receive the money? If this is T plus 2 currently outlined in the market, this one's in 2016, as I remember. When do you receive? Time?
You will receive the money on the next Tuesday.
Tuesday. Okay, let me check. So this one T, right? And we don't count for Saturday and Sunday. So Monday will be T plus 1 and Tuesday will be T plus 2 correctly. So on Tuesday, you will receive the money based on T plus 2 settlement process. All right, so that's for the settlement process. And we go back for the things more important here is that if T plus 3, so this 2 dates will be in 2 days difference. And if T plus 2, so this will be in 1 day difference. For example, like XY date, like this one. XY date, so that will be XY date on Tuesday. If T plus 3 process, T plus 3 is under T plus 3 process. So this due date will be in 2 days difference, right? The record date will be after or before the XY date, guys. The record date will be after or before the XY date.
XY date is earlier.
Yeah, earlier. So meaning that the record date will be after the XY date, right? And they say like under T plus 3, Wait a minute. What happened here? Here. Oh, wait. Under T plus 3. Oh, what? Oh, right. So this will be 2 days difference. Under T plus 2, 1 day difference. So how to get that date? U plus 2. Here. U plus 2 to the date here. So meaning that will be 13. The record date will be here. Okay. So there will be record date. All right. That's the way that you determine the record date and XY date. Usually in the market, the firm needs to announce these two dates together. But in the exam, maybe they will hide the information of one date and you need to determine the other. So if you are given the XY date is on 11th May, so it will depend on the process of settlement in the stock market. If that T plus 3 or T plus 2, and then it will define the record date. Currently, the market is applying T plus 2, meaning that after 2 days from the trading day, it will receive the share or the money, depending on the transaction. So you would know how to decide the record date. Like you see the case of number 1 and number 2 that I put up here. So the T plus 2 already applied in the market since 2016. That makes the dividend payment 2016 or 2020. Let me check again. I don't remember. T plus 2 apply since 2016 or 2012. 2016 maybe. Let me check again for you guys. So current, if there's no information about T plus 3 or T plus 2 in the exam questions, it just assume like we are at the current time and we apply T plus 2. All right.
Cho nhà cháu vay 1,6 triệu. Cho nhà cháu vay 1,6 triệu. Vâng. Để nhà cháu làm cái mạng mà. Cho nhà cháu vay.
Do you guys have any questions regarding this? Okay, so I remember correctly. Since 2016, this one is correct. So since 2016, they choose to change from T plus 3 to T plus 2. All right. So why do we call this one as XY date? XY date meaning that if you buy on this day, you buy, you get no right. So meaning that if you sell, you still get the right. All right. Get no rights meaning that your name is not on the shareholder list, made on record date. Why? So here we are applying the case of T plus 3, all right? XY date is on 11th May, and the record date on 13/5, right? XY date is the date as I mentioned before. If you buy the share, you will get no right. And like, why is that? So just look at the case here. If you buy wait a minute, under T plus 3. So I will put out here under T plus 3. So assume that you buy on, assume like you buy on XY date, you buy here. And T plus 3. So when do you receive the share? On which date? Right? Are you raising hand for answering?
I forgot to lower my hand.
Okay. So if you buy on Tuesday, when do you receive the share? It's at T plus 3. This one day T, right? This one plus 1. This one plus 2. This one plus 3. All right. So under T plus 3 process, if you buy on day T Tuesday, so on Friday, you will receive the share. And when you receive the share, you will become the shareholder of the firm. All right. But the list of the shareholder is already made on Tuesday. You receive the share on Friday. So after they finalize the list, meaning that the name will not be on the list. All right. And because that, you don't have the right regarding this two dates. For example, like if you buy on XY date, 5 of October 2020, for the case of MB above, right here. So if you buy on XY date, 5 of October, the name will not be on the list on 6th of October. You would not receive the dividend payment in share at this time. All right? Do you get this point? Well, are you clear? Any other? Are you all clear about this? This is important part, not only for the course, for the exercise, but also for the kind of investment in Vietnamese market in future if you have intention to do the investment in the market. So I will give you the case right now so you can practice. The case is that what if you buy shares on Wednesday, 12th of May, on Thursday, of May, on like Monday, 10th of May, and on some other date, like for example, like the case here is dividend ratio, cash dividend ratio, XY date and record date are 11.5 and 3.5 for receiving cash dividend of 30%. What if you buy a share on 8 on like 15 of June to 6X. Okay, so give me the answer. Do you receive dividend? First of all, how much dividend per share? Can you calculate how much dividend? Dividend per share, how much? could you give me that calculation?
$3,000.
How much? How do you calculate this one, Ming?
It's 30% multiple 10,000.
Good. So this one 3,000 per share. Good. Thank you for that. Okay, so I have like 1, 2, 3, 4 cases. All right. Hello, guys. Sorry for my connections. Okay. I should like bring you there here. Are you guys still here?
Yeah.
Okay. So next one. Wait a minute. What should I do with this one? Okay, here. What if you sell shares on those days? Will you receive All right. So this is the question for you guys. If you guys can solve this, I can give bonus point for you guys if you do it correctly. So I'll give you 5 minutes to break, and then we will get back here, even though it's kind of late already. Okay, so just think of the question, and then I will come back to you in 5 minutes to ask for the answer. Do you type the first one here? Number 1. What? Here, number 1 is what if you buy, and the second one, what if you sell? On those dates, right? Are you clear on my question? you guys done? Anyone can solve me for the first one? What if you buy on particular date? Remember that for next week, you will have a small quiz on what bond, all right? Dương Linh?
Are you asking question 1, right?
Yeah.
I'm not sure am I right, but I think that on the 3 dates, on Wednesday, Thursday, Monday, they are before the recording date at 13th, at May 13th. So on the third day, you will not receive no right when by sharing.
So you mean for Monday?
On June.
Keep going.
I mean the 3 days on 12, 13, and 10 of May, you will, when you buy share, you will not receive dividend because it's before the record date on 13th of May, and on June the 15th, you will receive a dividend because it's after that date.
Okay.
Because
Thank you, Ring, for that one. So we need to go back here a little bit. Nhung, do you have the other answer?
Just I think that if you buy the share on Monday, you will in the list of the shareholder will get the dividend. And if you buy the share in Wednesday and Thursday and 50 June, you will not get the dividend.
Why?
Because if you buy the share on Monday, you will it will record the transaction on the Thursday T+3. So it is the record date, and you will record as a shareholder. And if you buy the share on the Wednesday and Thursday, the transaction will be recorded later is on the is if you buy the share in Wednesday, it will record the transaction on the Tuesday next week. And if you buy the share on Thursday, it will record the transaction in sorry, if you buy the share in Wednesday, it will record on Monday next week, and if you buy on Thursday, it will record in on Tuesday next week, and mà cái record date in Thursday this week, so it's not record to pay you the dividend.
Okay, that's good. That's good for me. It's good. Lương and Khánh, do you have any comments for answers?
As for me, because the record date is on Thursday, so for Wednesday before the Thursday, because when you buy on the Wednesday, you have to plus more 3 days to have the right, but the record date is fixed, so you don't have the right. You will not receive the dividend because the day that you have right is past the record date, and that is the situation for all of the rest. Thursday, Monday, and 17.
In June 15, right? So we have the same answer with sorry, I forgot the name. Who just answered before Khánh?
It's Nhung.
Nhung. All right, yeah. So we have the same answer with Nhung. Lương, Chan, do you have the other answer?
Vâng, em có cùng để hỏi cho các bạn ạ.
Okay, very good one. So they already mentioned, when you buy on Monday, we remember that we are applying the case of T+3 process. So if you buy on Monday, you remember that if the name is on the record date list, then you will receive the right. XY date, X here, meaning excluding. So with the date that excluding the right. If you buy on Monday, so under T+3, you will receive the share on T1, T3 on Tuesday, right? And become the shareholder of the firm. And the name will be on the shareholder list made by the end of Tuesday, which is the record date, right? So if you buy on Monday, you will receive the dividend. All right. The name on the list, so you can receive the dividend. The second one is that I just retype that I write this, the first one, for you guys to copy down and to rethink after today's class. And for the exam, you just need to make it very short and correct. Don't need to make this long kind of explanation. First of all, like this, you can say like this. If you buy on Tuesday, 11/5, which is the XY date. So you have no right, have no right to receive the dividend. That's all. It's done. Here is enough for the answer for the final examination or the midterm explanation. And for our further understanding why we have received no dividend. Because if you buy on 11 May, so you will receive the share on when? Friday. On Friday, which is 14 May, and become the shareholder of the firm after the list of shareholder made on 13/5. So your name will not be on the list and you receive no dividend. All right. Same for what case? Same for buying on 13 May and 13/6. All right. It's way after the XY date and record date already. So remember that I don't care when the dividend is paid. I care that my name will be on the list or not. If my name on the list, so I don't care about the date of receiving cash dividend, because for sure I will receive it. It's just like my name on the list already, I will receive it for sure. So in the future, at any time, I will receive it. But if your name is not on the list, so you cannot receive the dividend. All right. We need to base on the XY date and the record date to decide if we receive the dividends or not. So for this one, I have this kind of, wait a minute, I have this kind of, how to say, hint for you guys. No, this is okay. Not good. So if we have this one is XY date, this one is from the XY date, you buy, you get right or no right. Dương Linh, Linh Dương or Dương Linh, I don't know. Sorry for saying the name wrong, but could you answer? If you buy from XY date and onward, you buy and you get right or no right. Dương Linh, are you here?
Yeah, I'm here.
Okay, if you buy, you get right or no right.
Buy at the X right date. You have right, no right.
Good, very correct. Thank you, guys. Thank you, Ling. So if you buy from XY date and onward, like in the future, XY date and the day after, so you get no right. And if you buy before, so you will get the right, like in the case of Monday, right? So to make it very like quickly answer for the for the multiple choice or true or false question, you can base on this kind of hint. If you buy before that, so you will get the right. All right, so that's a hint for you. From XY date, you're looking forward you buy, you get no right. But before the XY date, you buy and you get the right because you will receive the share before the record date, before the final list of the customer, of the shareholder is made, right? So the name will be on the list. You can receive the share, the right to the share, all right? And you know that this one is in secondary markets. This one is secondary markets, and because of secondary markets, so it will be the transaction between this investor and the other investor. So if the buyer gets the right, so the seller will not get the right, because one side of the transaction will get the benefit from the share. You are the owner of the share, then you get the right. But if you are not considered as the owner of the share, so you get no right. So in the case of XY date, you buy the share on the XY date, you receive the share on Friday. So even though you already pay for the share that you buy, you are not the shareholder yet. So who are the shareholder? The seller is still considered as the shareholder of the firm, and the seller will get the right. So the right to the buyer and the right to the seller will be in the opposite side. So if the buyer gets no right, the right will be given to the seller because the seller still hold the share, still hold the right to the share. And if the buyer gets the right, then the seller will no longer get the right. All right. So just remember for the hint for the buyer, and then you can think of the seller. Are you guys okay? It's kind of confused, right? So please reread this one, redo this example, and do for the second case, and give me the answer for the next time. All right, keep in mind the XY date and record date. For those that making investment in the stock market of Vietnam right now, please notice on the information that the firm, the listed firm, announced to the investor. When do they pay the shareholder? Usually, if you want a 30% of dividend is huge already, a lot of money already. So if you want to get the dividend, you don't need to hold a share for 1 year, right? If you look at the case here, if you want to get the dividend, how long should you make investment on the share? Fine.
As for me, you can buy before the expiry date and you can sell after the record date, so you will have the dividend.
Yeah, right, exactly. So not like many investors that don't have like basic understanding on the stock, right? They can think like, okay, if I want to take the if I want to receive a dividend 30% for the year 2020, I need to keep the share or hold the share for a year to get a dividend, but not like that, right? You can like just buy the share before the expiry date. For example, like you buy on Monday, right? And right after buying the share successfully, the name will be surely on the list made on Thursday, 13 May, right? So when you receive the share, you can sell the share right away. You don't need to hold the share for a year. So in total, you just invest in the share for 4 days in total, right? And you still can receive a dividend. All right. So keep that in mind for making the capital flexibly move in like different investments. And the second thing that you need to keep in mind is that usually for the XY date, the share of the price, the price of the share will decrease, will fall down because of the right. Because you buy on XY date, you get no right. So the price on the XY date will be decreased to balance the benefit between the buyer and the seller. It's already happens that you pay for the share on the XY date and you don't have any rights. So it's kind of disadvantage for the buyer. So that's based on the regulation of the Vietnamese market, on expiry date, usually the price of the share will be adjusted to be lower based on the right. So the more rights you get, the more fall in the share price. But if the share is strong enough, like you see that the firm paying 30% of dividends in cash, that huge amount, and the firm still have a lot of money to make investment to expand the firm business. So the firm performance will soon grow, and then the share price will soon like increase as well. So taking the dividends, receiving lower price for the share, but the expectation is still high, so you can choose to buy the share to get a dividend and have a share with good price in the future. All right. So maybe it's just that for today's class. You guys just review this one at home, and if you have any questions regarding XY date and record date, I understand that this is kind of confused for some of you guys when you first know about the market. So if you have any questions, just send me a message, email, or phone as well, so I can answer you, because this one is important part in the course. All right, guys, are you clear? Okay. Right now I cannot open it. Ty, you send me a message, right? Right now I cannot open a message. So who are you asking for? I can tell that person for you, so you can do the chatting for the next time. Ty, are you here? Trần Ngọc Vi. Vi, are you here? Ngọc Vi. Seems like she's not here. I don't see the name of V around here. So, Trần Ngọc Vi here. V, are you here? There's someone that asking to have contact with you. Seems like we just opened the phone and then she disappeared. Not joining. Okay, sorry, Ty. For that, I will change the setup of my Zoom. And for now, say goodbye to you guys. See you next time. And be prepared for the quiz and for the bond part as well. Review this at home. Oh, guys, at home, right? Goodbye for now, guys. Bye-bye. See you next time.
Bye bye.
Bye-bye.